Hi everybody, Alex Explorer here from Expert Forex, and in today's video we're going to look at the very best and possibly the simplest Forex trading strategy that you will ever trade. And the challenge that goes out to everybody watching this video: find a better strategy, because this one cannot be beaten. Now, what makes this system so great? Firstly, it's totally free. You can go and trade it. I'm going to show you exactly how to trade this one. There are no limits on the amount of money you can make. There is just no limit because it is such a good system. It is 100% proven, and I'll show you some fantastic results that we've achieved with this system. And it never makes a loss, and I'll show you that too. We will look at some actual trading, and it doesn't use indicators. It is 100% rule-based. So you just say, if this happens, then that. If that happens, then this. And that is the beauty of the system. Even as a beginner, you can trade it because it is so easy to understand and trade. It can be traded on most time frames. Because it doesn't use indicators, it uses price levels, and therefore it can be traded on most time frames. It can be traded on a manual basis, or you can automate it if you start getting bored. So let's go straight into the system. Basically, it is a breakout system. What you need to do is you need to draw a line over the recent high, which is, and in this case, it's 70 candles back. That's the one rule that there is: 70 candles back. You draw the latest high, and then you draw the latest low, which is over there in that particular range. So you create a range that is 70 candles back, and as I said, it can be on a 5-minute time frame, or on the 4-hour, or even on the daily time frame. This will work. So that's what you do, and that's how you set up to trade. Then the next thing is, the minute the price breaks out of that range and closes on the other side, like I show here, it actually closes on the other side, you will enter a buy, which is in the direction of the trend. So you enter buy, direction of the breakout, and the same happens if it breaks out to the bottom. You would enter a sell. Now, initially when you're testing the system, you will use a 0.01 lot size, and you will use a 20 pips target. Nice and simple, 20 pip target, small lot size. That's all you have to do, and you have to look for breakouts out of a 70 pip range. Very easy to do. I'm sure most traders can easily trade this system. So what happens next? If the target is reached, you go back to step one. In other words, you go and look for another breakout out of a 70 candle range, and you then trade from then on. If the price, however, goes down by 20 pips, so you remember your target was 20 pips, it now goes down by 20 pips, what you do is you open a new trade in the same direction as the first, so that you now have 2 open trades, and the same lot sizing if you wish. Then, once the total of all the open trades is reached, and I suggest a profit of, let's say, $1, then close all deals. So you most probably were making quite a bit of money on the target being reached, but when $1 is reached on the open deals, you close all the deals. But if the price keeps on going in the wrong direction, you just open a new trade every 20 pips until the total of the open deals reaches a $1 target. And I'm going to show you this. I'm going to show you this in some good trading examples. And once you've closed that $1, you go back to step one. That is it. That is the system. Such few rules, so few rules. All you have to do is follow those 4 rules that were laid out. Let's go and have a look at some trades that illustrate the principles we are talking about. Okay, we're going to be looking at some trades that were taken on the euro. This is the 15-minute time frame, and we're going to be looking at the rules playing out as I've described. Now, I'm not going to show you the recent high and recent low. That's going to be a bit tricky because this trading is on a continuous basis. but you will see how the transactions play out. Okay, let's go into the first transaction. Okay, it's looking there's a new low, and it's a sell, and there's the target for the sell. We just watch it and there it hits the target. So then now what happens is you can either wait and relax a little bit, or you could go back to step one and start looking for new ranges that build up. And you need to look at, and here's a new high that's broken out of the previous range. There was the target, and it's gone in the wrong direction. So it's now opened a second buy, and there's the new target, and there's a third buy, and there's the new target for the third buy, and there's a fourth buy, and a fifth buy. 1, 2, 3, 4, 5. Fifth buy, and there's the new target for the group of 5 trades that if it hits that target, then we will come out with about a $1 profit. Now, as you can see, it's battling along, and sometimes you have to be quite patient with this kind of trading. But as you can see, it's going on quite nicely, and we'll just wait for it to make a change. It's either going to go down and open another buy transaction, or it's going to go up and hit that $1 profit line. And there we are. They'd hit the one profit line, and it is now looking for the next trade. And there it's found the next trade, a new low, and there's the target that it's heading for. Let's see what and then it reversed, so it's now has 2 sells, and there's the $1 profit line that we see there. So if it goes up, we'll open another sell. If it goes down, then there's our $1 profit. Okay, the price is looking for a new high or a new low. Let's see how it goes. And there's a new high. It went into a buy. There's the price for the buy, but it's the price is started to go down. And here's the new $1 break even type of target. And there it hits it, and those 2 trades are closed at a $1 profit. And then it starts looking for a new low or a new high. There it's found a new low. It sold that one, but it bounced back. There's the sell. Here's the new target. You can see it averages out the 2 trades and creates a new target. And it's still going in the wrong direction, so the target's moving up, and it's opened 3 sells now. Let's open the 4th sell, but it's also moved the target up. So it is, there we go, we've got our target hit at a nice profit, and you can see it's just closed all those 4 deals. Okay, hunting for a new high or new low again. It's found a new high. Again, it didn't hit the target. It's opened a second buy, and let's see, up there it gets out at a small profit. Okay, hunting for a new high and new low again. There it's found a new high. Again, it bought. There's the target. Let's see if it reaches the target. Didn't reach the target, so it's created a new buy. Again, it created a new buy. The target is moving down, which you can see there's the previous target. It's moving down. Let's see what happens with this trade. And there's another one. So now we have 4 buys open. There's the target. Another buy. Target moves down. And there it closes them all at a small profit. And then straight away it starts hunting for a new transaction. Okay, it's found a new high, and and then it hit the target quite nicely. So then it starts hunting for a new high and new low straight away. Okay, there it's found a new low, and there it hit the target very nicely again. So, and there it's found a new low again and hit the target nicely. There it's found a new low, and it didn't hit the target, so it opened another sell, and there's the new target, and it got out at a nice profit. Now I hope you've seen that this is quite a tricky but effective trading technique to trade on a manual basis, because you have to watch the price very carefully. You can use pending orders to open trades that have gone the wrong way, and obviously you put your target in when you open the buy transactions, which can also be on a pending order, because you can see where the latest high is and the latest low. So you can use pending orders quite effectively with this technique, but it is very labor intensive, and you have to watch the charts for a long time. And that is why we have found it so much easier, because those rules are so easy. We have created a simple trading robot that will do all of this for you. Also, what we've seen is that we've only traded the euro here, and it goes for long periods without trading, and therefore it is good to trade as many currencies as you can. So this particular robot can trade a whole basket of currencies at the same time, which is a big advantage. You don't have to sit in the market and watch these new highs and new lows all the time. Now here's the EA that we've created, or the trading robot that we've created. It's called the Wave Liberator, and it tells you on this particular page, and I'll give you a link to this page in the description of the video as well as in the commentary of the video, but essentially it explains exactly what I've shown you earlier, that it trades the breakouts of the trading. And I think what would be good to actually go and look at some of the results that we've got. Now, this particular EA has only been launched about just over 2 weeks ago, so it has very little record, but I'm going to show you some of the most fantastic testing that is coming out of this particular robot. Okay, so let's go and have a look at some of the results achieved by the Wave Trader. And the other thing is, we have a similar EA that takes trades on RSI signals rather than breakouts out of ranges. And here we have all the Wave traders there. You can see the nice profitability, and remember, these have only been trading for about 2 weeks, so it's generating 50% returns, 40% returns, 60% returns, fantastic returns being generated, and that is because it never makes a loss. It just recovers those losses, as you've seen previously. The RSI itself hasn't done too badly, but that's not the topic of this video. And then we have another one where the Wave Trader has done exceptionally well over that same period. And just to show you some of the more successful accounts, let's go and have a look at the Wave Trader. Now, this trades the 15-minute, and you can see it's got the description reverse in it. And the reason why there's a reverse number there is that you can trade it as a breakout trader or a bounce trader, and sometimes the bounce works out very well. So let's go and have a look at that particular one. And here are the results. You can see there are no periods when there's a downward movement on the account. A nice win rate of 63%. Now, although the win rate 63%, it never makes a loss, and I'll show you a bit more about that. And it's made a nice 64% return over 18 days, considering those 18 days include 2 weekends. So we're looking at a 2-week period. It's traded, as I've said, the robot can trade a number of currencies at the same time. It looks like it's traded about 12 currencies at the same time. And if we look at the analysis, you can see that none of these currencies have made a loss. So it's a very robust technique. And you can see the profitability, the success rate is quite high. Also, if we look at the further stats, you can see that the well, it's only been going for two months. You can see both months are profitable. The weeks are all profitable. The days are all profitable. So it is a very robust technique that we're looking at. It's an automated technique. You can set and forget, put it on set and forget, and just forget about the trading. Now, I hope you're as excited as I am about this trading technique. It's a simple technique. It's very straightforward. It's a rule-based technique. So go and try it on a manual basis, see how it goes. Otherwise, think of purchasing the automated version of this technique. It's so much easier. It does everything for you. It trades the whole market, finds all the entries for you, and as you can see, it makes a lot of money in a very short time. Now, I hope you find this video interesting and educational, and gives you an idea of what is possible in this Forex market of ours. The basic technique that I've shown you is obviously not the one that's giving those fantastic results. We do have variations on that. For instance, the targets could be smaller or bigger. The distances to the top-ups could differ slightly, and also the lot sizing that we use when we do these top-ups can vary. But on the whole, we get great success with most of the variations that we touch. And as you can see, all of those testing accounts are all nicely positive. And as always, links to anything in this particular video will be in the description of the video, as well as in the commentary of the video. But if you want more information about this technique, go and read the marketing page of the Wave Liberator. I actually explain the technique there, and I also explain the type of settings that we use. So from me, Alex Aproy, cheerio.